Hello everyone, welcome back to another video. In this video we're going to discuss how to use profile charts and footprint charts on multiple time frames. So not only are we going to talk about intraday trading, but on how you can use the profile charts and even for footprint charts on a longer time frame. For example, with the recent fall that we've been seeing and people anticipating it will go much lower. So what we have to do is, as it's popularly known as market generated information, we will not our task is not to look at anything, or it's good to anticipate but not get ahead of the curve and look what the market does and what the market is telling us. That is something what we call as market generated information, and see how it reacts at crucial points. So straight away, this is a VSA chart. I did a video a few days back about this, so we're not going to go too much into VSA. It's the basic, but it is strong enough or good enough to know what are the crucial levels and what we can expect over there. So straight away, when I'm looking at this chart, the first thing that you can see is this is a place where we broke out from, and so if at all we reach this point, that is somewhere close to 280 if I'm not wrong. We'll just discuss these various points when we are talking in profile charts, rather footprint charts or market profile and volume profile. So what we have noticed in the past few days is a pickup in volume for sure. So you can see these factors really contribute and tell you things that you should if the fall wasn't genuine, or the fall wasn't good enough, the volumes wouldn't have been this much. So and again, what we discussed in VSA is we need a close above the previous day's close, which has not happened since the past 4 sessions, which is quite interesting with the volumes picking up. Now the first close that closed below the up bar over here was a lower volume bar. So at this point we didn't know that it is going to fall that much, but every move thereafter there has been pickup in volume and the close has been lower than the previous bar. So what you've noticed here is, look at the number of black bars. Now these black bars are not just based on anything, it is the close of the previous bar has always been above the previous day's closing. So we have had consecutively such a big move to one side. So it is quite it's nothing great to have a sort of a corrections of sorts. So when the correction happens, of course it is sometimes like this because the move was really steep. Now we'll straight away shift to the volume profile charts and understand what are the key reference levels that we can look out for in the future. The first fixed range volume profile that I would like to do is for this range. So straight away, when you see this is a low volume node, as you can see over there at this point. So this is one point that I would like to carry forward. So this is, you can see this is one point where the market closed the last time. This is the low volume node. The next one is somewhere here. So these are levels which will act as sort of a bounce or a pullback. Whether the pullback does continue something like this, or goes down like this, or goes back up, we don't know. It doesn't matter what has been happening in the past few sessions. As I just discussed, we have to look at what happens at these reference levels. So these are the major key reference levels, and of course you can see this volume profile node. I've drawn this particular fixed range volume profile because this is the place where the up move took place, and it was a good 1000 points straight in 8 to 10 sessions. So that is why I prefer to draw a volume profile here. If you want to go a little deeper, you can do that as well, if at all the market goes below that. So the one before that I would like to use is this VWAP, anchored VWAP, that I've used from the lows of 16800, after which we've been seeing every time a higher low. So as Dow theory suggests, so we've not seen any break of structure till now. So this is the first time from 16800 where we saw some sort of a correction. Again, it was a deep pullback, and almost closer to the last pullback area. It did come and has moved up, so something like that is happening here. So what we can see is, if the market is still bullish, I mean if it is still wanting to go down, it can very well go up like this and go down, or second scenario could be this, or it could continue even further. We don't know anything, so we just, and I mean we will see how the market reacts when it stops at a particular place. So the first thing, if we want to go in for a bullish bias on a string trading basis, that is we want to see a close above the previous day's close, that is a black bar simply if you are using BSA, and a bar like this wherein the close is above the half midway point, and a high volume, so which says some buyer stepping in, and that should preferably be happening at a key reference level that we've just discussed. Now the next, I will just take this out and we will move on to the next volume profile, fixed range volume profile that we can draw. The next one is from this zone where it's from the 1600, the 900, 17,000 zone, from where we saw we've been seeing a continuously good up move from March onwards. So this is the area. Now over here also you can get really good reference points which you can take forward. So if at all we break this low, so what we go, I mean this volume profile node, the next obvious reference level is this one, which is closer to 19,000, where we have a volume profile, I mean low volume node, and there was a gap over here that is unfilled. So I'll just delete all this so that you can see it. So there was a gap over here that is unfilled, which could be tested and the market could continue upwards or consolidate by time over here. That is again to be seen. So this is one aspect. Now let's move on to the daily volume profile. I have that over here, so let me just we'll move on to the footprint charts. Okay, let's go on to the market profile charts. Now what as I keep saying, what I prefer in market profile is again having balance zones marked on my chart, so that I can I mean take a good view of what is happening. Just a minute, I'll just make it yellow. So yeah, so this is a balance zone that was there in play, and the market consolidated here for a long time in these 400 points and then shot up, and it has come on top of the balance zone. So the first reference level that we're looking for over here is somewhere at these levels. So you can see this volume profile node over here, it's between 550 to 600. So we can expect some sort of a bounce if we do go over here in the next session, and then followed, if this breaks, of course it leaves a huge gap of about 100-150 points that needs to be I mean that would be covered probably in one shot if we do break down and there is that much of negativity over here. So that can happen, and we can if we break that as well, so we have the low of this balance zone which can get tested, and again this is exactly the same point which you saw on the VSA charts. So these are the profile charts for you. Even in the profile charts, I'll just show you what has been happening in the past 3 sessions. So the first one over here, as we just discussed, was a balanced profile day. So at this point there was no indication as such that the fall was about to come, but this one over here, where you have a good amount of single prints forming, and I mean you can see it was not even tested once, and after that what we have seen is shift in value areas continuously, and there's been not even one day where the value area has, I mean there is a chance of value area overlapping until this point. Now this is the first place we've been having gap downs in just 3-4 trading sessions. We've seen this. This is the first place where we saw a value overlapping taking place. So at this point there is some sort of a halt that has taken place, and it's, I mean that it isn't to say that the market will reverse from here. The markets generally tend to do this even before they're planning to go down even further. So again that's ought to be seen. But what we derive out of this last trading session is that the selling has slowed down a little bit at this point. Now the first thing when the market opens and it has to continue is bearish bias of the trend is it generally, if that happens, the value area should not overlap, and if the market selling is to be as ferocious as it has been in the past 3-4 sessions, and it will simply test this area in one trading session, and the next one it might test this. And if the selling is to stop, or there's to be a break and then the selling resumes, what we can see is a balanced volume, market profile, 2-3 sessions happening like this, or maybe a little bit overlapping, and then market takes its next step towards the downside or the upside. And now let's go on to the volume profile charts. So this is let me go back here. Okay, so this is a 30-minute volume profile chart. Over here also what you will see is these same things what we discussed in market profile, that you have to mark out these balance zones and see from where the moves have been taking place. For example, what I'll show you here is just let me get this. Yeah, so this is one area where you've seen a move going to the up direction, and just above 500 is one place where you can expect, if the market does come here, a sort of pullback, because it did consolidate in this zone and then moved up. Similarly, the next zone that you have in picture is this one, and this volume profile then becomes a magnet, and the markets would tend to come over here. So what you have to remember is this big range, somewhere close to 230 to 250 or 270 is the place where we can expect some sort of a bounce or a pause if the market decides to go there. Before that, we have a lot of reference levels. What I would like to say is, if we enter this, I'll just take out everything from here. If we enter this balance zone over here, this is what I'm trying to say. So if we do not, this is the same zone that we marked in the VSA as well, where we use the fixed volume profile, in the market profile as well. If I'll just show you over here. So this is the zone. If it doesn't break, so we spoke about this volume profile node. If it doesn't break, we can expect a consolidation, and if the market is to go up, this is the point where it should stop and go in the other direction. If it does not, of course, what we expect then is the lower end of this to be tested. So if you are a swing trader, there is no harm in expecting to take these 300 points if it does enter the zone, and you see some sort of using the same concept, some sort of continuation pattern forming. Now the last thing that I would like to say in this volume profile charts is, this is again, we saw a gap area over here. So these three volume profiles that formed here do have some significance. That is why I'm continuously saying that this is a point that is make or break for the markets. If we do end up here and we try and break from here, then we can probably see some sort of a good move, another 400, maybe 300-400 points fall from here, because this is an important level. From all the charts that we've just seen, this turns out to be a great a level of great significance. So I'll just take this out. I'll show it on the VSA chart as well. This is the point I'm talking about. If this breaks, we are certainly heading towards 19,000 and below, or maybe this range. So if you this consolidation, the other way, smart way to do is it. I'll just get the fixed range volume profile here. So this consolidation that you see, just this one. So we are likely to test somewhere close to 18,732, which I just spoke. If we break this, another 400-500 points is what we can expect, a move up till this place if the market has to stop here. And the other confluence that is taking place is the anchored VWAP from the lows of 16,800 that we saw somewhere in March. So this is another zone which we can test if we break this, which we should hold for some days at least, if of course the market is not bound downwards in a very fierce manner. So that is about sorry for that, this is the volume profile chart. So in all the three charts, that is the VSA, volume profile and market profile, we have marked this as an important reference point, that is this one, and we expect it to hold for some days at least before we see any move to either side or consolidate by time. If we do break this, as we discussed, we can see a 400-500 points downward move again. Now coming on to the footprint charts. Now it's not that you can use footprint only for intraday trading. It is really helpful even in longer time frames. That is what we are discussing today. So this is the last trading session. Now it's very important to I'll just go to the last day. So it's really important to have a look at the volumes and the activity that has been taking place. So I'll just get this down and get it to the levels where we are. So this is a 30-minute time frame footprint charts, and what I generally like to do over here is look out for these buy imbalance zones that are plotted over here, and the big bar volume profile nodes. So what do I mean by that? Wherever you see a big bar, for example, this one here is a big one, and you saw these nodes, and the ones that are virgin, so they're of real good importance. So for when you're using market profile, or sorry, volume profile or footprint charts, one thing you can volume tells you a lot is you can see the volumes fading down over here on this day, that is on Friday. Look at the volumes fading down, and what was actually happening in the markets all this while is the markets were moving up. So that wasn't a surprise when we saw this move not sustained. So if we want to see a sustainable move, I'll just show you what happens in scenarios like that. We'll see that move from 19,200, which we just discussed, from where we saw one straight up move to the up direction, and it did not stop after that. So what you want to see is these high bars absorbing some sort of sellers and then taking aggression on the other side, and this shouldn't be happening. What should be happening is a lot of volume picking up, the market pausing at one level and then again shooting up, with volumes being very high. So you can see the volumes are higher when the market is wanting to come down and not the other way around, which is a sign that you shouldn't be actually looking for up moves that much. So even if you're scalping, of course these fierce pullbacks will take off your stops. So even if you're scalping, you have to be wary at these points, maintain your position sizing and have your stop losses placed like that. So now let me straight away go to important points. Now these reference points, which are the virgin points in the 30-minute bars from the footprint charts, are exactly matching if you go and check out your other charts that we just discussed. So there is a buy imbalance over here, and you see over here there are good amount of volumes on the upside. So exactly what I was trying to tell you just a little while back. So even during the pullbacks and the up moves, the volumes are really high, and these balance zones that are left behind are again in confluence with the charts that we just discussed, that is the volume profile and the market profile charts. Even the VSA charts, if you look at them closely, and the techniques we discussed a little while back regarding the closing of the bar would come in handy. And this is one point that we discussed. This is another one. It is exactly near about the points that we discussed in the profile charts, that is the market and the volume profile. Now what I wanted to show you is this particular area where we had a big surge in volume, and I wanted to show you these particular two candles where what we can expect if the market is to have some sort of upside and stopping taking place. So you look at these bars, okay, and look at the volumes that have accumulated here, and look what happens where the bar closes now, and it leaves behind these virgin point of controls on a 30-minute bar. So this is exactly the area which I think if the market does reach here, the market will hold on for some time before it takes its next move. So we'll just expand this, and I want to show what happens here. So firstly, the volumes are really high, and look at this one over here. It jumps, and immediately you see the max delta over here is 1.21k. So there was some sort of buying that did come up at this point, and the volumes were really high compared to the previous bars. And the next time these two bars, if you see, it left virgin point of controls immediately after the volume bar, and the next volume bar, which was again a significant gap up. And you see what has happened here also. So what is being noticed here is aggression being shown by the buyers over here. There is no absorption as such that has taken place here. Of course it did happen over here, but look at the strength and aggression and confidence of the buyers, that they didn't even let these important areas that we keep discussing get tested. So this is what you should see if you are to see any sort of stopping volume coming in that due to the down move that is happening, and the market to reverse. What we saw on Friday is these up moves, all of these were on very very low volumes, and look at this up move, it picks up volume again significantly, and the market continues on the upside. Whereas what we saw on Friday is these high volume bars were on the lower sides, on the lower bars. It is exactly opposite what we should be expecting if we want the markets to move up. Now the next one is that place that I wanted to show you is this one. It's again where the first time, like I keep discussing, there was some sort of, I mean, on these bars, whenever these lows were being made, you saw all of these bars. Look at this, the first time when it makes, there's an absorption of sorts that takes place, and this happens on all time frames, and we've discussed this again and again in our videos. The first step is absorption of some sorts, where the volume of, I mean, is absorbed of either the buyers or the sellers, in this case the sellers, and the next step is that the other side needs to take up the aggression to move the market in the other direction. So what we see after that is a follow up with huge buy imbalances and buy deltas forming on the other side. Similarly, when you see over here, this is a big down bar, the volume isn't that high. So this is the first indication. You compare the volumes of these two bars, the second time when it breaks this recent low, the volumes are not as high, and look at the, I mean, the delta at the end. Whatever selling happened was taken out even in this bar, and immediately after this close you can see the volume pick up. It was the next trading session, and you see a test of this, and the bar closes up and leaves a buy, I mean a sell imbalance here, which again is a key reference point which we've just discussed, and this is the zone that we are expecting the market, if it breaks, to hold on for some time. So over here I've discussed all types of charts and how to use them and how you can use them in all types of time frames. So hopefully this video was of some help to you guys. Until next time, bye bye.